All right, everybody, we're back here on the Peter Schiff Show. Tom Woods in for Peter. Very glad to welcome back to the program a semi-regular, Robert P. Murphy, Bob Murphy. Bob is the author of a whole bunch of things, and since I want to get right into talking to him, I'm going to cheat him by mentioning only The Politically Incorrect Guide to Capitalism, the indispensable book, The Politically Incorrect Guide to the Great Depression and the New Deal. Wow. That book packs a huge punch in relatively few pages. Politically Incorrect Guide to the Great Depression and the New Deal. And also Lessons for the Young Economist, which is a beautiful hardbound textbook for younger audiences, teaching them about economics. Beautifully done, as is everything Bob does. Bob has a site and blogs at consultingbyrpm.com. Bob Murphy, welcome to the program.
Well, hey, Tom, thanks for having me.
Well, pleasure as always. Let's start with a little current event thing. You can never go wrong talking about gas prices because everyone's interested in it. So I was just reading people saying that obviously we're not hitting, we don't have a new record at the pump being set. But given this time of year, at this time of year last year it wasn't this high, or the year before it wasn't this high, so who knows where it'll be a few months from now. Where do you see it going?
Well, obviously it depends on what happens in terms of foreign policy, but yeah, you're exactly right that it's not that the pump prices right now are an all-time record, but they are an all-time record for this time of year. And so given that typically gas prices go up into the summer months because people are driving more and there's constraints on the refining, that, yeah, people are plausibly expecting that it's going to be set all-time records this summer. And certainly if things were to really actually break out in the Middle East, then, you know, they'd be off through the charts.
Now, what is it about gas prices that makes their prices so volatile day to day? We drive by the gas station, we see the prices different every day as compared to, you know, I don't know, Fruit Loops or something, which seems to be pretty stable every single day. What is it about this commodity that makes it that way?
Well, I think there's two things. So one is, I mean, you might be right about Fruit Loops, but it's not like there's huge billboards when you're driving to work that show you the price of Fruit Loops that day. So part of it could be that you just notice gas prices since they're, you know, just put right in front of your face when you're driving. But, yeah, I think it's partly just because it's a fungible world market. Oil is, obviously, and so because of that, they're very tight margins. I mean, people have this idea that the guy who owns the local gas station just decides, you know, he wakes up in the morning and says, well, how much do I want to bilk my customers today? Do I want to make $1 billion or just, you know, $900 million? Let me think. And that, of course, isn't true at all. They have a very tight margin, so when oil prices move, then the refiners have to change what they do, and the people selling the retail have to change what they're doing. So they have to keep up with it. And also because it's right in front of your face, if the guy across the street drops it a few pennies a gallon, well, then people who are kind of indifferent are going to go to him. So they kind of have to really always be watching what their competitors are doing.
Bob, this is the first time since I've filled in for Peter, I don't know, maybe a dozen times so far. It's the first time I've had calls already on the line before you came on, specifically for you. So I'd actually like to go to the phones, if you don't mind, and talk to these people. They sound interesting. I want to start, if that's okay with you, I want to start with Ronnie in New York. Ronnie, welcome to the Peter Schiff Show.
Yes, hi, Tom. I just want to say it's a huge honor to talk to the two of you. And if Walter Block was there, it would probably be my three favorite economists in the world, so it's really an honor. But I wanted to actually ask Bob about what's happening with that debate with Paul Krugman, because I think that politicians really run for cover behind these phony economists. And even more important in some ways in the presidential debates is somebody to finally just debate and put to bed some of the stuff that we're reading in the New York Times. And I wanted to know what was happening with that and what people could actually do to help make it happen.
Bob?
Well, sure. Thank you for the kind words. Yeah, so for the listeners who don't know, I would just point them to KrugmanDebate.com where you can get more details. I just had this long-standing challenge for the Nobel laureate Paul Krugman, who's probably the biggest Keynesian on the planet today, wanting to debate him on business cycle theory, the Keynesian versus Austrian view. And at last I checked, there's about 75,000 that Austrian people have supported, saying if this debate happens, we will donate this amount to a food bank that I selected in New York City. And thus far, Paul Krugman has decided that his time is not worth $75,000 going to the food bank.
Bob, what is the website where people can find out about your challenge to Krugman?
It's KrugmanDebate.com. So Krugman is Krugman. So KrugmanDebate, all one word, .com. And so if people are interested, then, yeah, there's no obligation on your part. You're just making a conditional pledge. If the debate happens, then, your credit card gets dinged. So for the caller's question, I mean, what I am going to do when I get some more free time, my workload lightens up, I'm going to try to make some more promotional videos, maybe get the food bank to give a public service announcement and say, hey, we could use this money it's real money that's on the line there, and maybe get Krugman to reconsider.
Well, Ronnie, thank you very much for the call. I certainly appreciate it. Bob, as long as we're on the Keynesian thing, how is it possible that somebody like Krugman can look at the crisis that we've just endured and are still going through and feel like he and Keynesianism in general have been vindicated, and yet at the same time, the anti-Federal Reserve Austrians and austere Austrians feel like they've been vindicated? What's going on? I mean, does that just go to show that economics is a whole lot of bunk? Like, what is this? How could this be true?
Yeah, it's a great question you ask, and you're right. I mean, I have been very embarrassed just being an economist for the last few years. Like, I keep making jokes to my colleagues saying, you better get something else going on, because when the people come out with the pitchforks, they're gonna string us up pretty soon. Maybe right after the lawyers.
And people with pitchforks are not very discriminating. They're not going to say, wait, that's Bob Murphy. He was one of the good ones.
Right, exactly. So, to answer your question, yeah, I think a lot of it is just the nature of economics, and this is stuff that Mises and other Austrians have been stressing for their careers and saying this is why the methods of the natural scientists, you can't just carry them over blindly into the social sciences. So in particular, it's because you can't have a reproducible experiment, a controlled experiment. We can't roll back the clock to early 2009 when Obama came in and said, well, what if he had done a stimulus of the size that Krugman recommended? Or what if they did what the Austrians said and they just cut the government's budget drastically and cut taxes and, tie the dollar to gold, or just got rid of the Federal Reserve, and then what would have happened? So we can't do that. So what we do, what we can observe is that they did a stimulus that was much bigger than the Austrians wanted, that was smaller than what Krugman wanted, and the economy got worse than Krugman predicted it would. And so the question is, does that mean he was right, that, see, I told you we needed a bigger stimulus, or does it mean the Austrians were right when they said a stimulus will make things worse? And just looking at any one particular episode, nobody can say. Just like with the Great Depression, economists still are in disagreement over that. So from our point of view, the Austrian point of view, we're going to say, yeah, see, Hoover raised spending a lot. He put in a New Deal light. Even FDR's own advisors after the fact admitted that everything we did under the New Deal, the Hoover administration actually started the ball rolling, and we just kind of extended it. And so you would think, from our point of view, what better evidence could you see? The closest the U.S. has ever come to a command economy absent wartime was the 1930s, and clearly that was the worst economy we ever had. So, what more do you need to see that we're right? But, of course, Krugman's going to say, well, if you looked at hospitals, you'd see people getting medicine were really sick, and you wouldn't want to just conclude, therefore, that medicine makes people sick. And the reason FDR had to do all that stuff was because how bad the economy was since Hoover didn't do enough. So it's, with all these things, it just shows the importance of having an antecedent economic theory that you use to sort of parse the world with, because otherwise you can always, after the fact, come up with some ad hoc explanation as to why your theory's been vindicated.
And, it's so funny that, the way you explain that, it just makes so much sense, because we sometimes hear it said that the Austrian school, and this is said basically by people who probably have not read Mises' epistemological problems of economics, but you come across in some of these internet debates.
For the 3 people on Earth for whom that's true?
Yeah, right. Yeah, but you do come across in these internet debates, people will say, well, the Austrians don't care about empirical evidence, and they're just dogmatists, and they don't look at it. But the point is that in the real world, when you're looking at the same empirical evidence, people are drawing exactly the opposite conclusions. That goes to show the Austrian point is that obviously empirical evidence in and of itself in the social sciences, when it's not clear exactly whether you've got mere correlation or causality, can't in and of itself settle the debate anyway. There's no way it can, or otherwise Krugman would have gone home already. So, all right, let's. You're
right, and it's just to follow up on that. Russ Roberts, who's an economist at George Mason, he's not an Austrian per se, but he's, I think, a fellow traveler.
Yeah.
He was involved with that Hayek Keynes rap video. But he, on his blog, within the last 3 months or so, came out and said something. I'm paraphrasing. Said something like, I don't believe that these estimates. There's all these econometric estimates of the multiplier, and he said I go with the ones that are low or even negative because of my prior beliefs, not because I'm weighing the evidence. And he was just being honest, because his point was these apparently scientific guys who just say let's let the data speak for themselves. they come up with, some people come up with a negative number, and some people say government stimulus has a multiplier of, double what the government. So his point was, this isn't like we're measuring the charge on an electron. These estimates are just all over the place.
Right.
And he said, isn't it funny that the people who are politically in favor of Keynesian remedies tend to believe the studies that come up with the high number, whereas I, who am a libertarian personally, I tend to like the studies that come with a low number. And so he's just being honest, saying, of course that's the way it's going to play out. And people were jumping all over him, saying, oh, see, he admits he's an ideologue, when in fact he at least acknowledged what the situation was.
Yeah, that's exactly right. All right, let's take another call. We're going to basically what we're going to do is we'll take the call, take the question, and then we'll take our break, and that'll give Bob some time to chew over the question because we are coming up against a break. Let's talk to Bo in Northfield, New Jersey. Bo, welcome to the Peter Schiff Show.
Hey, Tom, thank you for having me, and I just wanted to say that you are a great asset, and I admire you and what you do.
Thank you.
I grew up I was born in Bosnia. I'm Serb from Bosnia and moved to former, Serbia, former Yugoslavia, in 1992. And we went through a hyperinflation from 1992 through 1994. And beside me agreeing on everything you were talking about, foreign policy and everything else, I don't know how we can make our way out of this situation that we have with all this debt that's accumulated. And especially with them printing money, I know Peter Schiff mentioned that the interest rates will inevitably have to rise at some point. I have a two-part question. Number one is, what would make the interest rate rise, and can the Federal Reserve continuously keep them at the low levels, artificially, obviously? And number two, this is for Rob. In terms of our future, next 3 years, 5 years, 10 years, what is the future going to look like in terms of our economy, our debt, our inflation, which I believe it's actually coming in a big way.
Okay. All right, Bo, thanks very much for the questions. Bob, hold on just for a second. We're going to go to a break. When we come back, we're going to get answers to those questions and talk a little bit also, if we have some time, I hope to talk about insider trading. It's been 8 years since the Martha Stewart matter, so it's a good time to reflect on this. As always, 855-4-SCHIFF, 855-472-4433. You're listening to the Peter Schiff Show, the gold standard in talk radio. Stick around. All right, everybody, we are back on the Peter Schiff Show. Tom Woods in for Peter, joined by Bob Murphy, Robert P. Murphy, whom you should be following at his blog at consultingbyrpm.com. And you can click on his free advice blog and put it in your RSS feed and never miss another word from Bob Murphy. Bob, let's go. Let's take up the questions that we got just before the break about the Fed and the future. Go ahead.
Well, sure. So, yeah, it's a great question, and let me give the caveat. I thought things were going to break sooner than they have, but we have still been seeing – I mean, people keep warning about, we're still on the edge of a deflationary cliff, and that's crazy. I mean, first of all, everybody who actually buys gas and goes to the store knows that prices are rising more than the government's official numbers would indicate. But even if you look at the government's own numbers, they are just all uniformly, no matter what category you're looking, even if you're looking at consumer prices with food and energy removed and all those things they do, they're all higher than the Fed's own alleged comfort zone. So in other words, right now we have more price inflation than what the Fed says is its desired target. So if we had a regular economy, in other words, right now, that would be a sign that it was, quote, overheating, and the Fed should be raising interest rates right now. So they can, of course, they're going to say, well, we can't because the economy is still so bad that it's better to err on the side of price inflation. But the point is we're already where, their policy has failed. We're already in stagflation, even on their own terms. So the question is, well, how long can they do that? So the caller wondered, could they keep interest rates low? Yeah, I mean, they can do that as long as they want. The Fed can just keep buying up more and more of the treasuries that are out there in order to keep the official yield wherever they want it to be. But at some point, if no one in the private sector is willing to, while prices are rising at 10%, they don't want to be earning 0.25% on their treasuries, that would make the Fed have to just buy up every last treasury bond on earth. So they could do that if they wanted to. There's nothing legally stopping them. But once that started going, once we started going down that path, everybody would realize it was game over, and they would just dump the treasuries. And at that point, Bernanke or whoever's in charge would have to decide: are we literally going to just destroy the dollar, or are we going to let interest rates spike? So I don't know when that choice is going to be made. I think partly what's happening is because Europe is so bad, people are rushing to the dollar as a refuge, whereas if the rest of the world had been normal and we had our current policies, I think people would be dumping the dollar a lot more aggressively.
Bob, we've got, let's see, well, basically what we've got is 5 minutes, and that's not a lot of time to deal with this next issue I want to raise with you, but our friend Walter Block has a classic book called Defending the Undefendable, where he takes some of the most unpopular groups and tries to show that, wait a minute, these people have been unjustly maligned. And so that brings to mind this week in 2004, Martha Stewart was convicted of lying to Congress in the course of an insider trading investigation. And I always find, libertarians in general believe that insider trading is basically a victimless crime, and they are willing to defend it as a perfectly acceptable practice, and yet it sometimes comes off sounding like the person is an apologist for evil and wicked people in our society. So if you had just a brief few minutes to explain what insider trading is and what the problem is with criminalizing it, how would you do it?
Well, sure. So the spirit behind, the rationale, the official justification for these laws against insider trading is that it's allegedly unfair if somebody who works, on a Wall Street firm or somebody who deals with certain companies and has access to information that's not in the public realm, if they know things are going to happen and then they're allowed to personally trade on that and, in a sense, take advantage of people on the other side of the trade who didn't have access to that information. And so that's, some people say, so that's just unfair, end of story, it should be illegal, or other people try to make a utilitarian justification and say, well, that's going to make regular people afraid to invest in the stock market, and so we don't want to scare them away, so they need to have some assurance that sort of thing's not going to happen. So you're right. Economists, there's like the libertarian argument to just say, hey, it's property rights. No one's sticking a gun to your head if you want to trade with somebody and they happen to know more information, so be it. But even beyond that, just economically, that's a silly objection to raise. In any other context besides financial stocks, we want people to trade who are experts. Like when it comes to baseball scouts, can you imagine if somebody said, well, no, we don't want the sports teams hiring guys who actually know baseball and can identify talent. We should just randomly grab people off the street and say, hey, get me my next pitcher. And we think that the major leagues would be better that way. That would be crazy. Or like when it comes to art, would anybody get mad if at an auction people went there who actually were experts in the art that was being auctioned off and were making bids based on their own knowledge about how valuable the thing was, instead of just grabbing random people off the street and saying, what do you think this particular painting is worth? In any other context, we want experts with so-called inside information profiting from that trading on it so that the prices are accurate. And that's what happens here with stocks and in the financial sector, that if somebody has information, if they know there's going to be a court ruling that's going to come out tomorrow and make the stock go way up, we want them out there buying the stock now because that makes prices less volatile. So when the news breaks, the price doesn't jump 50%, maybe it only jumps 10% because the so-called insiders have already been bidding the price up. And so us is like Joe Sixpack on the outside who has no clue about these things. That actually makes the stock market less risky for us because we know day to day there's not going to be these massive bombshells of news getting released that will make our portfolio go way up or way down. And so if you're just a long-term investor and want to just have some of your wealth in equities, you don't have to worry about day-to-day massive swings because those so-called speculators and insiders are out there doing their job.
That's a good point. I've also sometimes wondered, I can understand, I don't agree with it, but I understand the complaint that somebody gets some inside information that makes him think that this stock is just going to plummet because he knows something about the company, and so he just unloads it, and you've got a good argument as to why that's actually socially very useful for him to do that. But what if he gets inside information saying, I think that stock, this company's going to get better, the stock's going to rise, so his inside information leads him to hold on to his stock. Could we throw him in jail for insider non-trading?
Right. That's a brilliant point. I don't remember which economist first raised that, but yeah, you're exactly right that's just the enforcement of this. So, putting aside the philosophical or the economic things against it, but just if you were going to try to enforce it, at best all you could do is go one way with it, where somebody was in the absence of getting that information was going to do something with their current holdings, but now they hear it, and so they just refrain from it. So just observing them, you could never, conclude that, but economically it's the same thing.
Bob, thanks for spending time with us today. We're out of time. That's Robert P. Murphy. Got to check him out at consultingbyRPM.com. politically incorrect guide to the Great Depression and the New Deal, lessons for the young economist. This guy is great. On the other side of this break, Michael Bolden of the 10th Amendment Center. Peter Schiff Show, the gold standard in talk radio. Stick around.